Last week, I did a video lifting the skirts a little bit on some of the stock trading I'm doing right now in Tesla. It's kind of in its salad days, having risen almost linearly for the last 3 months. For the last 6 months, it's gone from about $179 up to a high near $500 for the 6 months. But it became particularly volatile after the announcement of the quarter four numbers at 112,000 cars. And I said it's going to be quite volatile right now because there's still 25 million short shares out there out of a float of about 146 million. And so I expected quite a bit of volatility. Going forward, I still do, but I showed you some of my positions with calls and puts. I titled the video why I finally went short on Tesla stock. That was a little bit tongue-in-cheek, of course. But I got dozens of comments from people belittling me and warning me against shorting Tesla stock. They obviously came into the channel on the clickbait title and didn't bother to watch the video at all. I'm kind of astonished at the level of mental acuity on YouTube these days. I'm not too sure we're going to be on YouTube much longer. That's a strange group of people. Our longtime viewers are somewhat more astute, and many of them have written to note that they're already driving Teslas they've bought following my stock notes or mentions in the past. I really don't view myself as a financial advisor, and I don't even play one on TV. But what I actually was doing and illustrated last week was what I call bracketing the range. And that is that we're going to have Tesla volatility, and I'm going to bet on it both ways. And hopefully I'm going to win on it both times. But in Wall Street parlance, this is termed a straddle. I intentionally avoid the use of that term. This is a very dangerous and explosive game, particularly in these dollar amounts that I'm doing it in. And the mental imagery of it being between my legs is an image too far for me. And so I call it a bracketing the range. And so let's take a look at what happened in the intervening week. And what we see here is we had been at about $450 a share at the end of last week. We opened Monday at $440.47. And we did about 9 million shares, I think, on Monday, and closed at a little over 450. On Tuesday, we did a little higher volume, and we went up pretty much linearly to $470, 469, something like that, on the close on Wednesday. On close of Tuesday, we opened Wednesday and shot up, and I'm not too sure this wasn't the short squeeze, because we did over 28 million shares on Wednesday, with an average 9.5 million for the previous 10 trading sessions. That's about 18 million shares above normal. And we did something similar on Thursday. On Wednesday, we actually hit $498 a share on the stock price. But on Thursday, while we opened up in $495, we closed the day down just over 480 at 482. And so on Friday, our volumes dropped precipitously, and the stock drifted down to to about $478. So note the huge, it's not very clearly depicted on this chart, but we had huge volumes on Wednesday and Thursday on a stock with only a float of 146 million shares. I'm going to posit that a large number of shorts covered their position. I don't think this is new people coming into the stock. I think this was people getting off of their short positions, and it may be what we'll see with regards to a short run. I had hoped for something more dramatic, but the volumes are already pretty high at 10 million shares a day. And so with 25 million shares out, it doesn't take very long for them to cover doing 25, 30 million shares a day. We could have washed out a little bit. And so that's the end of the week, much lower volumes, slowly drifting down from 482 to, I think it closed at 478. So from the open to the peak this week, we see a jump from 440.47 to about $498, 13% move in the stock, and back down to 478, closing the week up 8.5%. And so it was a good week for Tesla stock. So let's take a look at what happened to us. During the course of the week, I sold a number of options, all of them call options. And on Tuesday, I sold 100 of my 300 February 21st $600 calls. And I sold them at $6. Turns out to be not such a good move, but no, I did triple my money. I had $1.95 averaged in those 300 contracts. Of course, the contract is for 100 shares, so $1.95 would be $195. And I sold 100 at $6 for $60,000 with investment in $19,500. So I can kind of close the books and go away right there. By Tuesday at 2:30 in the afternoon, which is over here, we're up around $470, and I've taken a profit of $40,000. On Wednesday, about 3 o'clock in the afternoon, I sold another 50, but by this time it had climbed to $10.63. So I raised $53,000, $150 in cash out of the same $1.95 pool at $10.63. Wish I'd held that 100 for Monday and done that then too. But this is kind of the way you trade these, don't be a pig. Also on Wednesday, I sold 10 of the March 20th 600s, and those were up to $15. Now I had $2.75 in them. And on Thursday, in the morning, actually just before 11 o'clock our time, but 11:48 Eastern, I sold another 100 of the February 21st 600 calls at $9.28. And I sold 20 of the March 20 calls at $12.98. So I got a little bit less for them as the stock is dropping. And on Friday, I mostly bought. And so the net effect was that I turned $57,000 into $246,910 in a week. That's a 333.18% gain and put $189,910 into cash. Now, this is what I'm talking about, the leveraging of options, which is most effective when the stock is volatile. The stock itself went up 8.52% for the week. If I had timed stock purchases and sales perfectly, in other words, bought at the open Monday and sold at the peak at $498, I could have made 13% on my money. I did 333%. Well, that gives me a lot there to lose on the downside. And so let's take a look at what I bought that week. On Monday, I bought 10 February 21st, $350 puts, a little bit higher execution price at $350 at $3.60 a contract. 10 March 20th 350s, which because they're further out, they cost a little bit more at $5.10. And let's see. Actually, I did 2 purchases there at 1:16 p.m. of 10 each puts. And then on Wednesday, I bought 10 March 23 50s at $4.31. Now, again, these were $5.01 the day before. Now they've fallen to $4.31 as the stock goes up. And on Friday, I bought 100 February 21st 300 puts, way out of the money, but they're $1.10 now. And so that's a pretty cheap bet. And so here's what I'm holding during the weekend. I have, let's see, 50 February 21st $600 calls left. They're down to $675. And so I'm glad I sold some of those at $10 and $12. Well, at $10.63 and $9.28, because they've fallen to $675. But I'm still holding some. I've got Tesla February 21st 300 puts. I have 170 of them. They're trading at $1.13. Recall I bought some of those at $1.10, so I made 3 cents so far. And some February 21st 350s at $3.40. And some March 20th 600 calls at $9.70, and some March 20 350 puts at $5.50. So my cost basis on what I'm holding is $74,304, and I'm sitting at $87,260 right now. And I'm a little bit more balanced. Actually, I've kind of moved to the put side. I've got 61,800 in puts and 12,500 invested in calls. So my balance has changed from calls to puts, making me just a tad bearish. But even on my holdings, what's left, and most of them are gone at this point, I've moved mostly to cash. But even on what I'm holding, I'm up 17% as opposed to the stock gain of the underlying stock of 8.5%. So you can see that the options, and I'm playing them both directions, we can do a more leveraged investment and get much higher gains this way. But it's a dangerous game. We're playing with fire here. And at this point, I've moved most of it to cash. I took out 189,000. I put in 57, took out 189, put in 28, and I'm sitting on 87 in play. But I'm about $160,000 of my winnings in cash are sitting entirely on the sideline, kind of keeping your powder dry. What's it going to do this week? Well, isn't that the question? And if I knew with any certitude, I would be doing a lot more of this than I do. But it was a good week for me so far. I guess if I had to guess, I'd say we're going to drift down slowly from the 478 level, and I could easily see us at 440 by the end of this coming week, right back where we started, and perhaps a little lower the next week, but that brings up a very good point at which to buy. And so I'm going to call this week the week of the dip, a very gradual, calm reduction in price. We're not going to get much of one, but we could get down to 440, even 420 in the next week. Why is that a good time to buy? Toward the end of this next week and early the following week, because I think it's going to drift down slowly and try to stabilize. But Tesla announces their earnings on the 28th. And, of course, one or two things will happen. They'll go up or go down. But they'll start moving in that direction 3 or 4 days before they actually announce. This is kind of inherent in the dirty game you're playing, in that some people know before you do what's going on. Now, that's not supposed to be the case, but I've noticed over time that in the 3 or 4 days where they have all this printed up and get set up for the opening, that loose lips sink ships, and that there's always a little bit of information gets out along the way. And so I would expect about the 24th actually for the stock to start to rise precipitously. And I think that the earnings call will be explosive, and it won't be on the earnings. I think the earnings will be up a little bit from the last quarter, but it'll be about the future talk that Elon's going to do during the earnings call about the rollout of the Model Y deliveries, and some chit-chat about the semi tractor truck, the large truck, and about beginning some deliveries of that in 2020. And I would expect some guidance for a number of total deliveries during 2020. Now, since he guided 360 to 400,000 last year and hit $367,000, his guidance on this earnings call will be have much more gravitas and reliability in the eye of Wall Street than his 2019 guidance was. He basically hit the bottom end of his range on guidance for 2019. So I don't really expect a whole lot of accolades for probably quite good earnings. That'll be the backdrop, but it will cause a lot of validity, or they will take very seriously, his blue sky talk about the semi-truck and the Model Y for 2020. I would also expect him to talk up the China factory and perhaps chat a little bit about the factory in Germany. China is particularly important. Must travel there for the Shanghai opening, and is going to be understandably excited about that. And I think that caused some of the bump this week. But the rumor has it that there's going to be a signing of a U.S.-China trade deal on January 15th, which is coming up this week. The trade deal doesn't affect Tesla directly, but the import of China is their growth and their numbers in automotive sales. In 2000, they sold 6,000 vehicles in the Chinese auto market. 2017, they sold 28 million, and we're growing quite fast. But the last 2 years, they've actually fallen off, and that's because the economy's been kind of in the tank on the Trump tariffs, the U.S. trade tariffs against China, and the, quote, trade war going on. This signing of an initial agreement and dropping of some of the U.S. tariffs should give a boost to the Chinese economy generally, and potentially could put their automotive sales back on track. There's simply a lot more people in China than there is in the U.S. We're a market for about 17 million cars. They were up to 28 million. But we have 330 million people, about 200 million drivers, so they have a 1.4 billion people. And as they reach middle class, they're going to want cars. That Tesla is at the luxury end of that is not too much of a problem. So China has quite a bit to do, and I expect to hear him talk quite a bit about China numbers and what China is going to do with the Model 3 and Model Y in the earnings call. Of course, the man never shuts up about autonomous driving, full self-driving. I don't think it's going to happen anytime soon. Again, I'm a bit skeptical of the whole concept. I can sometimes get mine to get itself out of the garage. It'll open the door, it sometimes closes the door behind itself. But right now, artificial intelligence doesn't look very intelligent to me. And so I kind of discount all of that. But I've become a little bit bigger fan of the Model Y since seeing a number of them, shots of them in the wild, and realizing how much larger a car it is than a Model 3. I think it's going to be a huge deal. And I kind of understand the silence that Musk has had out there on the Model Y, because he wanted to sell Model 3s and still does, but as we approach his ability to deliver Model Ys, I would expect some of his emphasis to go to that, and I'm hoping to hear some about it on the January 28th earnings call. I think that could be a huge deal for Tesla in 2020 against the backdrop of earnings again in the fourth quarter of 2019. As we look into 2020 with Tesla's numbers, their China factory being online, the prospects for one in Germany, if they can get the fruit bats moved out, and the semi-truck coming online with the Model Y, I think we could look for a very optimistic earnings call with a lot of future chat about what's coming, that in the backdrop of having hit his numbers last year and having been profitable several quarters in a row, that will continue to boost Tesla stock. Once the shorts are thoroughly washed out, and I think subsequent to that earnings call, that'll be the last we hear of very many of them. The concept then is a bubble stock or darling stock. Tesla's not ever going to be fairly valued for years. It's not about valuation, it's about momentum and emotion. And as we've seen with stocks such as AOL and going back to Netscape and of course Amazon and Apple and so forth, growth is the most attractive element in the stock market, and that's where people go to try to make large gains. Tesla could turn into a darling stock, could even become a bubble stock, and by that I mean it just gets bid up to kind of insane levels, quite beyond what it could ever be valued. And some of that could break out after the January 28th announcement. I don't have a crystal ball. I can't tell, how far or if that's going to happen, but it's certainly a possibility, and I want to be in a position to profit from it. Again, many who've written, and you don't need to, it's none of my business, but I guess a lot of people haven't been able to contain that they've made enough in Tesla stock to buy a Tesla. And that's as good as it gets. Right now, as you can see, in 1 week's trading, I can buy any version of the Cybertruck I want. And it's on the house's money. So that's enough stock talk for now. Stay with us. We'll try to get back to a little bit of solar energy and electric vehicle stuff, but I did want to kind of share what we're doing in trying to play a very volatile stock. I remain, of course, bullish in Tesla, and the end game is to take the cash back into the relatively stable world of stock ownership. But in this case, instead of buying back my 801 shares, probably pick up 1,000, using the winnings from the day trading in Tesla options during this very volatile period. Stay with us.